Corporate tax is already in effect in the Emirates. Companies are required to file tax returns and comply with the new rules, even if their rate is 0%. Yes, that option is possible too. In this video, we will explain who is required to pay tax, who may not have to pay at all, and what you need to do to keep your tax benefits and stay compliant with the law. I'm Daria with Garant Business Consultancy. In this video, we will walk you through the most important details of corporate tax in the UAE in simple terms. Let's get started. Bringing the tax system in line with international agreements, that was a key goal for the United Arab Emirates. One of the steps towards it was introducing corporate tax. The corporate tax law came into force on the 1st of June 2023. If your company's financial year matches the calendar year, the tax has been in effect for you since January 2024. This tax applies to a company's taxable profit. In the UAE, taxable profit is calculated as follows. Start with the accounting profit shown in your income statement, then make adjustments according to tax rules. This includes subtracting expenses that the government does not recognize, for example, fines or an owner's personal spending. Then add income that wasn't recorded in the accounting books. After these adjustments, you get the taxable amount. Corporate tax is calculated on that amount. The rates are clear and simple. If the company's profit is less than 375,000 dirhams, you pay nothing. If the profit exceeds this amount, the excess is taxed at 9%. This rule applies to mainland companies, free zone entities, and even foreign branches. But here is the important part. Some companies can apply a 0% rate even if their profit exceeds 375,000 dirhams. And now, let's find out exactly who qualifies. There are several categories of businesses that can qualify for a 0% tax rate, even if they make a profit. But in order to keep this right, it is important to meet a number of requirements. Let's figure out who can avoid paying the tax and what needs to be done for that. The first category is small businesses. If you earn no more than 3 million dirhams a year, you can choose a special regime that allows you not to pay tax on profit, even if you are in the black. An important nuance: if you are part of a multinational group or registered as a company in the free zone with entitlement to benefits, then this regime is not available to you. The second category is organizations that are completely exempt from tax, government entities, pension and investment funds, as well as companies in the resource extraction sector. The third category is companies from free economic zones. This point deserves a bit more details. A qualifying free zone person is a company operating in a specially designated free zone in the UAE to maintain qualifying free zone status. A company must have real economic presence in the free zone, an office or premises, an important number of employees and managers, and must conduct its main income-generating activity there. They can apply the zero tax rate, but not to all of their income, only to so-called qualifying income. What exactly is qualifying income? It is income from sales or services provided to other persons entitled to operate in the free zone, as well as income from certain permitted activities on the UAE mainland. The company must ensure that its non-qualifying income doesn't exceed the set threshold, either 5% of total income or 5 million dirhams. If it does, the company loses its qualifying free zone status. Qualifying free zone companies are required to keep separated audit financial statements, register for corporate tax, and file an annual tax return. They must also maintain documentation providing that their income meets the requirements. If a free zone company receives income that doesn't meet the criteria, for example from unauthorized activity on the mainland, it loses its qualifying free zone status, and all of its income becomes subject to 9% tax rate. Even if you are sure that you qualify for the benefit or work at the zero rate, there are still obligations you must meet. What must every single business without exemption do to comply with the law? First, registration with the FTA, the Federal Tax Authority. This can be done online through the FTA portal. You need to create an account, fill out a form with the company details, upload the required documents, and wait for the approval. After verification, the FTA will assign a local equivalent of a tax identification number, the tax registration number. Here you must be very attentive. Any mistake in completing the forms or submitting documents can result in the FTA review taking up to 22 days. Second, annual submission of the corporate tax return. This can also be done without visiting the tax office online. Third, maintaining full accounting records with documents that can be presented if necessary. The UAE takes tax compliance very seriously. Reporting is not a formality, but a tool to protect your business and confirm your tax status. It is better to take care of all this in advance rather than later dealing with additional charges and sanctions. It is important to know other nuances as well. You automatically fall under transfer pricing rules if you work with related companies. Such companies are considered to be legal entities and individuals who directly or indirectly own 50% or more of the shares of another legal entity, control 50% or more of the board of directors, or simply exert significant influence over decision-making. These can be family businesses, corporate groups, or firms with common shareholders. All transactions within such structures must be carried out at market prices. The Federal Tax Service expects you to maintain documentation confirming why you set a particular price. In some cases, you are also required to submit a special form about such transactions along with your tax return. This is especially important. If the tax authorities believe that you have understated prices to reduce profits, they have the right to recalculate your income and assess additional tax. It is important to remember, transparency, logic in pricing, and proper documentation are the best protection against tax authority claims. So how to pay less while staying compliant with the law? By outlining some principles, we can define the basic rules. First, monitor your income level. If you are approaching the threshold of 375,000 dirhams, smart expense planning can keep you in the 0% zone. And if there is a risk of exceeding that threshold, it might be better to move to the 9% rate in advance to avoid penalties. Second, if you qualify for the small businesses regime, use it. This not only means a zero tax rate, but also reduces administrative burden. Third, if you are registered in a free zone, make sure you maintain your qualifying free zone status. Even minor compliance issues can lead you to losing all your benefits. Don't forget that losses can be carried forward to future periods. This is especially valuable for startups and companies with fluctuating profits. If you own multiple companies, consider offsetting losses within the group. Finally, keep clear and accurate records. This is not just a formality, but a tool for both protection and savings. Solid accounting means peace of mind when filing your tax return and strong adjustment in case of any audit. Corporate tax is a new development for the UAE. However, the approach remains business-friendly. A zero rate for small businesses, benefits for free zone companies, and minimal bureaucracy. The main thing is to understand your tax status, make use of the available opportunities, follow the rules, and submit documents on time. This was Daria with Garant Business Consultancy. Learn more about businesses and investment in the UAE on our channel. Subscribe and see you in the next video.